All right, let's jump right in. We are going to tackle one of the most powerful and, let's be real, one of the most intimidating looking tools in any trader's toolbox, the Ichimoku Kinko Hyo indicator. I promise by the end of this, you're going to go from seeing a crazy mess of lines to seeing crystal clear trading signals. Yeah, when you first look at a full Ichimoku chart, it is chaotic. You've got lines crisscrossing, you've got these shaded clouds. It's a lot to take in. And if you're thinking, what on earth am I even looking at? You're not alone. But trust me, there is a beautiful, simple logic hiding in all that chaos. And that is exactly what we're about to do. We're going to take this so-called gibberish and translate it piece by piece until it becomes a language you can use to read what the market is telling you.
So, first things first, what's in a name? Well, with Ichimoku, the name is everything. It's not just some fancy label. It's basically the instruction manual. Understanding the name is the very first step to unlocking its power.
And there it is. Ichimoku Kinko Hyo literally means a glance at a chart in equilibrium. See, it was designed by a Japanese journalist way back in the 60s with one goal in mind: to give a trader a complete picture of the market's balance or imbalance in a single look, one glance. That's the whole point.
So what does this one glance actually show you? Well, think of it like a Swiss Army knife for your charts. It's not just one tool, it's a whole system wrapped into one. It shows you momentum, it projects future support and future resistance, all at the same time. It's pretty much a 3-in-1 powerhouse. Okay, so now it's time to meet the cast of characters. The whole Ichimoku system is built on just 5 key lines. And once you get what each one does, that crazy-looking chart suddenly starts to make perfect sense. So let's break them down one by one. First up, we've got the backbone of the indicator, the Kijun Sen. You'll usually see it as a blue line. The best way to think about this one is as the market's center of gravity. It's the stable baseline that tells us where things are truly balanced over the medium term. So the Kijun Sen, or the standard line, is all about that medium-term momentum. All it does is find the halfway point between the highest high and the lowest low over the last 26 trading periods, which is, roughly a month of trading. And its signal is simple. If the price is above this line, sentiment's generally bullish. If it's below, it's bearish. Now, let's meet its faster, more nimble partner, the Tenkan Sen, which is usually the red line. If the blue Kijun Sen is like a big, steady cruise ship, the Tenkan Sen is the speedboat zipping around it. So, the Tenkan Sen, or the turning line, does the exact same calculation but over just 9 periods, so about 2 weeks. This makes it way more responsive to what's happening right now. And when this speedboat crosses the slower cruise ship, that's a huge signal that short-term momentum is changing, and it's something traders watch like a hawk. All right, this next one is a little weird, I'll admit, but it is so clever. Let's talk about the Chiku span, the green line. Think of this as your reality check. Okay, here's the trick. The Chiku span isn't a new calculation. It's literally just today's price, but, and here's the key, it's drawn 26 periods in the past. It's a genius way to answer one simple question. How does today's price compare to where the price was a month ago? If today's price is flying high above where the price was back then, that's a powerful confirmation that your uptrend is for real.
And now for the main event, the thing that gives this chart its totally unique look and feel, the Kumo. That's the Japanese word for cloud. This is the star of the show. So the Kumo, or the cloud, is actually the space between 2 different lines that are projected out into the future. One line is basically the average of our speedboat and cruise ship lines, just pushed 26 days forward. The other is a longer-term equilibrium line, pushed even further forward. And the space between them creates this cloud, a visual forecast of where support and resistance are likely to show up. And get this, the thicker the cloud, the stronger that wall of support or resistance is expected to be.
So let's pull up that messy chart one more time. It doesn't look so crazy now, does it? You can actually see the players on the field. You got the fast red line, the slower blue line, that green reality check line trailing behind, and you can see the price interacting with that futuristic cloud. See? Each piece is just telling its part of the story. Okay, so we've met the players. Now let's see how they team up to give us actual, concrete trading signals. This is where the rubber really meets the road. So here it is, the million-dollar question. How do we actually use all this stuff to find a decent trade? Well, the real power of Ichimoku
is in something called confluence. That's when multiple signals all line up and scream the same thing at you.
Let's use a bearish or a sell signal as an example. For a really strong signal, you're looking for a trifecta. First, that green Chiku span has to cross below the price from a month ago. Check. Second, the current price needs to be trading clearly below the cloud. Check. And third, that fast red Tenkan-sen line should be pointing down, showing you that momentum is to the downside. Check.
And boom, here's a perfect picture of it. Look at that. The green line makes its downward cross, the price is way below that big old cloud, and the red line is angled down. All three conditions are met. That's a high probability signal to go short.
And what about a bullish buy signal? Simple. You just flip the whole thing upside down. You want to see the green line cross up through the price, you want the current price to be trading above the cloud, and you want to see that red line pointing up. When you get that trifecta, it's a strong signal that the bulls are in charge. All right, as we start to wrap this up, I want to leave you with the single most important rule of the Ichimoku system. If you forget everything else, please remember this one thing. At the end of the day, this is a trend-following system, period. Full stop. Its entire reason for existing is to help you figure out which way the river is flowing so you can swim with the current, not against it. Ichimoku is all about keeping you on the right side of the market's momentum.
So what's the biggest red flag, the clearest sign of a market without a trend? It's when the price is stuck inside the Kumo cloud. If you see the price just chopping around in there, going nowhere fast, the chart is telling you the market is confused, and that is your signal to step aside and not trade.
So there you have it. What looked like gibberish just a few minutes ago is now a detailed map. A map of the market's balance, its momentum, and even the obstacles that lie ahead. The chart is always telling a story. So the question is, now that you can speak the language, what story is it going to tell you next?